I didn't believe a man existed who could not be stopped by a slug from a 45.
I've got a hunch this killer's gonna be our baby.
While I'm working on my trading course, I wanted to do some free videos where I show you some of the tips and tricks I use for trading, since I've been day trading and scalp trading and swing trading for quite a while now. Most people, when they trade, they use the Japanese candlesticks, and today I wanted to talk about that. I wanted to talk about a more efficient way of trading, a more efficient way of reading the market, and that is by using the HEIKIN ASHI candles. So first and foremost, if you're new to the channel, if you love cryptocurrency, if you love the stock market, if you love making money, don't forget to subscribe, leave a comment, tell me what you want to see next, tell me what you're excited about in the crypto space or in the forex trading space, whatever it is. This is going to be a weekly series where I talk about different trading strategies, and we're gonna start right here. I'm looking at the Bitcoin chart, but this works literally for forex, for any stock, anything that really works with candlesticks. So first, if you go to trading view, you have this button right here where it says candles, and instead of the Japanese candles, hollow candles, or whatever you use, you will click on the HEIKIN ASHI candles, and right off the gate you see a huge difference. The HEIKIN ASHI candles work in a different way, where they don't show you each and every single candle, but they more show you a trend, and it's way easier to spot the trend with the HEIKIN ASHI candles. You can clearly see an uptrend going on here, and if we do a short comparison, you can clearly see the difference in these two types of candlesticks. So how exactly are the HEIKIN ASHI candles calculated? The opening of a candle is the open plus close of the previous candle divided by 2, and the open usually goes right by the middle of the previous candle. And then the close right here is calculated by using its high, using its low, using its open, and using its close, divided by 4. And that is how we get the close of the candle. Now obviously you don't need to know all the mathematical stuff behind how the candlestick works, but here are some of the things that you do need to know. If we have green candles with huge upper wicks like this, means that sellers are entering the market. And what does it mean when sellers enter the market? Price goes down. That's what happens all of the time. So green candles are always good to see, but be on the lookout for the wicks. If the wick is big like this, and if it goes on a few candles which are all next to each other, it means that sellers have entered the market. On the other hand, if you see a red candle with the wick going down, it means that buyers are entering the market and not letting the price fall any more down. Now this is going to be way easier to explain if I go to the 1 second chart and show you how these candlesticks form in real time. Now we just need to wait for some volume. As this is happening on the 1 second chart, as it's going up or down depending on if people are selling or buying. So yeah, this is real time, and it is using the HEIKIN ASHI candles, but the 1 second chart is not something you trade, it's just something you look from time to time if you're a very experienced trader and you know what it all means. So if on the 1 second chart the price goes up a little bit and then falls back down to about this level but not below this level, we will get the wick instead of just getting a red candle like here. We got the red candle here because the price went too much down. There was too much selling, but as you can see, it was bought off since we have the lower wick right here. But then again, as I said, this is the 5 and 1 second chart, and they don't make too much sense if you just look at them on their own. This was just an example to show you how the wicks are made and why. So I hope you understood that. If you didn't, I will go over this in more in-depth in one of the next videos where I just talk about the wicks. So if that's something you're interested in, be sure to let me know in the comment section. But now I'm gonna go back to the 15 second chart and try to search for some more candles, try to explain this further. So as you can see, as the price is going up, the green wicks are getting longer and longer, which means sellers are entering the market. As the price goes down, we see the red wicks getting longer and longer, which means buyers are going back in. Now, when you see something like this, the chart doesn't really know where it's gonna go. It's either gonna go up, it's either gonna go down. Right now, it's undecided, and this right here is uncharted territory and something I never trade if I don't have any other indicators telling me that I need to put in a buy or a sell order. But looking at just the candles, this is not something I would trade. On the other hand, if I just look at the candles, this is something I would trade. When I see 3 red candles with wicks going down and down, with the last red candle having the wick higher than the previous red candle, it's probably a good idea to enter a trade. So again, red wick, buyers entering the market, green wick, sellers entering the market. So And if you see a candlestick with no wick at all, it means that the price is very solid and it's gonna continue going in the direction of the wick. So if it's a red solid without the wick, the price is gonna go down. If it's a green solid without the wick, the price is gonna go up. It's just gonna continue the trend. So keep on the lookout, look at the wicks. Very, very important. Oh, but also always keep in mind what could be possible. Like for example, right here, looking at this green wick, you would think the price is gonna continue going down. But what happened here is that the price has just reached a level of resistance, which does not necessarily indicate that the price is gonna go down. So what happened here is it continued to go sideways, a little bit went down, but ultimately went above where this wick was. So it's never just using the candlesticks and the wicks. You always need to use a couple indicators to tell you when to put in a trade. Usually what I use combined with wicks is the RSI overbought or oversold indicators. Right now I'm using Market Cipher, but this also works with any RSI where you have this upper section and this bottom section right here showing you when it's overbought or oversold. When it's below this bottom section here, you can clearly see the line down there. The line is what I mean. The line is what I'm looking at. If it goes below the line, like right here, it means it's oversold. If it goes above the line, it means it's overbought. Obviously, if it's overbought, it's gonna go down. Sellers are gonna enter the market. If it's oversold, it means that buyers are gonna enter the market and price is gonna go up. So combine that with the knowledge of the sticks and looking at the charts, you will clearly know what to do and what trade to put in, if you should sell short or buy long. So I hope this tutorial helped understand the HEIKIN ASHI candles a little bit better. If you have any questions, be sure to ask me the questions in the comment section down below. And also, this is just part one of a whole series where I will show you different indicators I use, different candlesticks, different strategies, and just all the different things I use when trading. This is just one of the things that I've shown you right here. I don't want to give away everything in one video, so be sure to subscribe and be on the lookout for new videos. Until then, my name is Tony, and I'll see you next time. To the moon, boys! To the moon!